The strength of a nation's currency relies on its economic strength, with the U.S. economy being the world's strongest. On August 15, 1971, the U.S. suspended the dollar's convertibility to gold, a pivotal moment in economic history. In 2008, the world faced a major financial crisis. Governments intervened with bailouts. However, unease persists in the financial world. Despite government deficits, the economy isn't improving, causing widespread concern about the future. In 1944, at Bretton Woods, a new financial system was established post-wheat to stabilize the world. The US dollar, backed by gold, became the global reserve currency. Countries fixed their currencies to the dollar. However, increased spending led to concerns about insufficient gold reserves, prompting countries to demand gold for their dollars. President Nixon's suspension of gold convertibility in 1971 created a fiat currency system where currencies are backed only by government promises. This can lead to devaluation. Today, all countries use fiat currency, where governments can declare valueless items as money, impacting global economies. Countries devalue their currencies to boost exports. Every paper currency is measured against the dollar. If the dollar falls, central banks intervene. A Ponzi scheme is a fraudulent investment promising high returns by paying earlier investors with money from new ones, requiring a constant influx of new investors until it collapses. Without the gold link, the U.S. Treasury could borrow and spend freely from the Federal Reserve, which prints money in exchange for government IOUs bonds. This system resembles a Ponzi scheme, where the Fed creates money for the government, which then borrows more to repay the principal and interest. In the current system, all currency is borrowed into existence and must be repaid with interest. This creates a perpetual debt cycle, characteristic of a Ponzi scheme. Since 1971, the U.S. has had trade deficits, buying more from other countries than they buy from the U.S. Countries invest their dollar profits in U.S. government bonds, perpetuating the cycle of borrowing. The lack of tangible backing for currencies allows governments to print unlimited amounts, devaluing the currency and causing inflation, which reduces purchasing power and living standards. Governments often underreport inflation. In a global economy, countries can artificially lower their currency value to gain a competitive edge, leading to industrial centers moving overseas. The current crisis feels different from typical recessions, potentially marking the end of the 40-year fiat currency experiment. The global economy, structured as a Ponzi scheme, relies on increasing debt. While the 2008 crisis was temporarily addressed through bailouts, the underlying problems remain. Printing more money may offer short-term relief, but risks a rapid decline in the dollar's value and a loss of global confidence. Hyperinflation involves rapidly rising prices and a loss of faith in the currency. Many historical currency collapses resulted from poor policies. The dollar is on a path to collapse. A return to a gold-backed economy might seem logical, but those benefiting from the current system resist it. Gold and silver prices are believed to be artificially suppressed. Gold is an obstacle to governments' ability to print money freely. Central banks' gold sales and manipulation allegations exist. Keeping gold prices low helps maintain the dollar's reserve currency status, despite mismanagement. Gold limits government control. Fiat money empowers governments, while real money empowers the people. Market instability has increased demand for gold and silver, exposing potential problems with central bank gold holdings. There are suspicions that central banks have sold or loaned more gold than they possess. This could be a massive global fraud. The only solution politicians and central bankers seem to know is to create more money, inflating the currency. The alternative is to stop inflating and return to a sound currency, which would end the current system. While individuals can't save the world, they can protect themselves by embracing a gold standard personally. Instead of trusting fiat currency and politicians, individuals can rely on real assets with intrinsic value like gold. Gold serves as financial insurance. The current financial system may be failing, but this presents an opportunity. A global currency crisis could lead to the greatest wealth transfer in history. The 2008 financial crash was delayed by the same poor decisions that caused it, offering a temporary reprieve. This time allows those who see the approaching crisis to protect themselves. Historically, gold has been a safe haven and currently presents a significant potential for gains in purchasing power. The best action individuals can take is to become financially educated.